Okay, so when you see a title like Avoiding Taxes is Easy, actually, I bet you're a little skeptical, and I get it. But what if I told you that for most people, it really is? We're going to break down why taxes aren't the big, scary monster everyone makes them out to be.
So, be honest. When you see the word taxes, does your stomach do a little flip? If it does, you're in good company. I mean, so many people feel that way. And if it's your first time filing, yeah, it can feel super intimidating.
But here's the thing, and this is the good news. For most of us, it's actually way simpler than you'd think. The whole anxiety really just comes from not knowing what's going on. So, you know what? Let's fix that. We're going to walk through it step by step. And you might be wondering, well, why is it such a mystery? And honestly, the reason is kind of wild when you think about it. It's because they don't teach this stuff in school, right? No wonder it feels like everyone's speaking some secret code that you never got the memo on. All right, so let's pull back the curtain on the first big secret of your paycheck. This is something that's happening all year round, probably without you even noticing. It's how the government gets its piece of the pie long before you ever sit down to file your taxes. It's called tax withholding. And really, it's a pretty simple idea. Just think of your employer as like a helpful middleman. Every payday, they take a small slice of your earnings, they send it over to the government for you, and then you get the rest. It's basically an automatic savings plan for your taxes so you don't get hit with a massive bill all at once in April. Kind of handy, actually. Okay, let's put some real numbers to this to make it super clear. Let's say you've got a job and you're making $50,000 a year. So you're earning that 50 grand. Your employer does a quick estimate and figures you'll probably owe about, let's say, 10% in taxes. So they'll withhold that 10%. That's $5,000, and they'll send it to the government in little bits throughout the year. That means the other $45,000 is what actually lands in your bank account. See? It's a pretty smart system when you think about it. Okay, so your employer's been doing this prepayment thing all year. Now it's time for the main event, actually filing your tax return. But don't think of it like some big, scary test. It's really more like a quest. Your mission is just to settle up your account with the government for the year. And here's the timeline of how that quest plays out. From January through December, you're working, you're earning. Simple enough. Then, in January, you'll get this super important form in the mail called a W-2. It's just a little summary of how much you made and how much tax you already paid through withholding. That W-2 is your starting point, and it gives you a few months to get everything sorted before that famous deadline, April 15th. So when it comes down to it, the whole goal here is just to square up. You're telling the government, here's what I actually earned, and together you figure out if what your employer sent in was too much, not enough, or maybe just right. And here's the absolute best part. You don't have to be a math whiz to do this. No way. Modern tax software, I'm talking about free sites the IRS itself points you to like Free Tax USA, they do all the hard work. It's like a simple interview. You just answer their questions, type in the numbers from your forms, and the software does all the heavy lifting for you. All right, now we get to the fun part of the quest. These are the tools that let you legally, and I mean legally, lower the amount of tax you owe. We're talking about deductions, and honestly, they can feel a bit like a magic trick. So what is a tax deduction? It's basically any expense where the government says, you know what, you can subtract this from your total income before we figure out your tax bill. So the lower you can get that income number on paper, the less tax you're going to pay. It's really as simple as that. Now, you've got two main ways to do this. Path number one is the standard deduction. Think of it as the easy button. It's a huge fixed amount. We're talking almost $14,000 for a single person that you can just subtract from your income, no questions asked. Most people take this. Path number two is itemizing, which is where you list out specific expenses, like medical bills or business costs. The big rule is you can't do both. But again, you don't even have to worry about it. The software will crunch the numbers and automatically pick whichever path saves you more money. See? Easy. And that's basically it. The software does the final calculation. If it finds out you actually paid too much in taxes throughout the year with that withholding we talked about, well, congratulations, you get a refund check. If you underpaid just a little bit, you just pay the small difference, and you're done. So now that you've totally mastered the basics, let's level up. We can talk about some power-ups. These are smart, proactive moves you can make all year to legally shrink your tax bill even more. Okay, some big ones. Contributing to a 401k. That money comes out of your paycheck before taxes, so it lowers your taxable income right now, while you're also saving for retirement. It's a win-win. Did you lose a little money trading stocks or crypto? The government actually lets you write off those losses to kind of ease the pain. Or, hey, maybe you held on to an investment for more than a year before selling?
you get a special lower tax rate for being a long-term investor. And if you've got a side hustle, let's say a cleaning business, that new vacuum you bought is a business expense, and you can deduct it from your income. And believe me, that's just scratching the surface. Once you're comfortable with this stuff, there are other amazing tools to check out. We're talking things like Roth IRAs, traditional IRAs, health savings accounts for medical bills, even 529 plans for college. They all have their own special tax perks. It's definitely worth a look.
Okay, so this all seems pretty logical, right? Which leads us to the big elephant in the room question. If it's this straightforward for most of us, then why, oh why, does the US tax system have this reputation for being an absolute nightmare of complexity? Well, you hear one theory a lot, right? That it's all complicated on purpose so tax companies can make a buck. And look, they definitely do profit from the confusion. But the real reason, it's much bigger than that. The tax code isn't just about collecting money. It's actually one of the government's main tools for shaping our entire society. Yeah, at its very core, the government uses tax laws to give us all a little nudge in one direction or another. It's all about creating rules that encourage behaviors they want to see more of and, well, discourage the stuff they don't. And once you start looking, you see this absolutely everywhere. The government wants more people using renewable energy? Boom, there's a tax credit for putting solar panels on your roof. They want to encourage people to buy homes? Okay, you can deduct your mortgage interest. Seriously, almost every weird, complicated rule you've ever heard of is tied to some specific goal like that. So when you look at it that way, you realize the tax code isn't just a bunch of random rules. It's a mirror. It's a reflection of what we as a society value at any given moment. It's this incredibly powerful tool that shapes how we spend, how we save, how we invest. And that kind of leaves you with a really big question, doesn't it? If the tax code is built to influence our behavior, what should it encourage us to do next?